Aave has been on a tear recently, climbing ever closer to its all-time high. In this video, we're going to talk about when we might see Aave return to the $600 mark and how much higher it could go after that based on previous price data. And if you do find this video useful, please consider liking and subscribing. That way you won't miss the bi-weekly updates that I'll try my best to keep up with. I have been known to be slightly inconsistent in the past, so if you're subscribed, it won't be a problem, you'll be notified. Anyway, with that said, let's dive into the comparison. Now, me personally, I think the crypto space follows a pattern very loosely, but I think we find the most similarities in that pattern is around the halving times. That's the big event that happens in crypto, and that's what we're going to be looking at mainly in this video. So you can see there's a lot of measurements here at the moment, but the time range that we're going to be comparing to is the low that came before the halving. This is on the US dollar pair as well, I meant to say. The low before the halving to the high that we got after the halving. The cycle high or the all-time high, whatever you want to call it. And to quickly summarize what we saw, if we zoom in, we can see that it was about 40 weeks before the halving when we bottomed out, and that was that cycle low for Aave. We slow and steadily climbed up until we reached the halving, and having a few corrections along the way. That was normal. We had a really strong rally immediately after the halving, putting in a high. Had a small retracement, putting in another low, returning to a level where we kind of saw a bit of consolidation before the rally, but nothing too meaningful. And then we finally put in a final rally that brought us to our cycle highs. And as you can see, it took us 15 weeks from the halving to put in this high that we got rejected from, where we kind of get this Elliott wave, basically. We get rejected from the high, we come down to a low, the range has been set, we come back up to the high, spend a bit of time testing the high, and then we break above it. Now, the reason I've got so many different ways of measuring this with time periods, I've got each move from high to low measured, and I've got the total time after the halving, and I have the total time from low to high. The reason I've measured these is because when you bring this data across, obviously each cycle isn't the same, so all of these data points aren't going to match again. I mean, for example, so far, after the halving, we put in this high 34 weeks after the halving, instead of 15, like we saw last cycle. So things are playing out a bit slower here, potentially. And that means that if you want to map the rest of these data points across, the 10 weeks from the high to the low, and then the 28 weeks from the low to the all-time high, if you want to map that across, it doesn't line up with the 53 weeks from the halving. So now we've got a ballpark range for potentially when we could see Aave top out. And if you want to follow the week by week, the red, blue, yellow, you could expect Aave to peak in August. However, if you just want to take it time after the halving, 53 weeks, that puts you in April. So much sooner than you'd think for us to get a peak. Again, not impossible, but obviously a variation. If you want to measure from this high, this first peak that we put in at the start of the Elliott wave, to the all-time high, that's 38 weeks. So if you then want to bring that across and measure from this high, saying that basically after this first high, it's going to play out in a similar way in terms of time frame, 38 weeks from there puts you in September. So there's a couple of indicators that point to kind of a Q3, Q4 peak, and there's a couple of indicators that point to a Q2 peak. Again, if you want to measure from the low to the high, again, just bring this over from the low to the high, that would put you in May as well. And this one, of course, 53 weeks after the halving, puts you late April. Now, before you make up your mind on which time frame you think is more likely, I want you to wait a couple more minutes because we'll look at the Bitcoin chart. And that is very interesting. It pokes a few holes in the comparison for the US dollar chart. And it kind of suggests that we could see a peak very far out for Aave, meaning a long bull run. But again, that's based on previous stuff. Anything can happen in these markets. If we want to take a look at how high Aave could go, potentially, again, we're going to do a similar type style of comparison where we're taking from this peak of the Elliott wave to the all-time high, and then we're taking the trough from the Elliott wave to the all-time high. The reason I take the trough is we can actually measure potentially how far Aave could fall for this trough. And I'm going to have to zoom out for this. But basically, if we bring it over here, if we match these two price points, more or less, and I'm just bringing over, I'm translating these price moves, the peak and the trough moves. If we line up the peaks so that they match, we can see we could potentially see Aave fall as low as $120. Now, I think that's a bit extreme because we're currently trading at about 360. A drop that far would be extremely drastic. But it does also kind of line up with where we If we take a look at previously, the previous cycle, we had this, again, this Elliott wave, and the low being a price that we consolidated at a little bit before the peak. If we zoom in here, we can see that we did have a bit of consolidation here. We did technically get a rejection, a 1 week rejection before breaking up. Again, going back here, we got a 1 week rejection before breaking up. It doesn't line up perfectly. It depends how you want to look at it. Things don't have to be perfect, in my opinion, but it's totally up to you. In fact, if we bring it down to the low here, where we break above, return to this low and bounce up from it, it's the same thing here. Bringing it down, we break up above, return to the low, bounce up from it. So there are similarities, but you could argue that, hey, why don't we get that here? Or why don't we bounce off this price point? They're both valid points. Either way, if you think we are going to get a bounce off a previous consolidation, you're looking at a pretty bad low. Or you could argue that we've already had it, this is it. But again, that would be a much shorter time frame here, and then you'd kind of have to disregard if 2 out of these 3 so far don't match, chances are the third isn't going to match either. And they're not even close to matching. This is over double the time frame. This red arrow here, because it was 15 last cycle, now it's 34. There's not much use comparing that if also this one is going to be wrong. If it is going to be right, you could see Aave have a strong correction that bottoms out by the end of February. So basically, for the next month, Aave might trade down. It looks like it could do that if you zoom in quite a bit. Potentially, you could argue, you could make a line here that Aave has been putting in lower highs. It has been doing that. It's also been putting in, technically, lower lows. So you could see Aave follow that trend for a little while. If you think about the time frame and you don't care about the price drop, you're probably looking at Aave reaching about $240 if it wants to tag the bottom of this trend line after the 10-week period. But again, those are big ifs and buts and definitely not guarantees, and something you shouldn't be banking on, something you should just be aware of. Potentially there's data that suggests we might see a bit of a pullback for February. And then again, you can kind of argue again, okay, if this is going to be our low, somewhere around $240, if we bring this up so that we can now compare how high we could move potentially afterwards. Again, from peak to all-time high last cycle, it was a 700% move. From trough to all-time high, it was a 2,300% move. So zooming out to get these numbers, you can see that it's putting Aave very high up. From the trough to the all-time high peak, if you translate that percentage, the 2,400%, that's going to put you at about $6,000 per Aave. I think that's quite a lot. I don't know if I'd be banking on that. If you translate the 700% move from peak to all-time high, that puts Aave at about $3,000 as well. So again, very high prices, very high prices. And again, about an 8x here basically is what you'd see if it is going to make that move. I personally don't think we'll reach either of those prices this cycle, and that is just because as cycles go on, we see diminishing returns. Aave has shown promising signs with the fact that it's had this strong rally basically for a year and a half. It's been rallying. That's a good sign. If we kind of check how long, it rallied for last time, again, it was just under 2 years, more or less. We're not too far away from reaching that 2-year mark. So just be aware that we are kind of at potentially the end stages of the bull run. And I would argue we have been in a bull run for at least a year. Like if since the last halving, Aave has done really well. Most of the crypto space has gone up. Bitcoin has gone up a lot. Ethereum hasn't, but a lot of other big cryptos and smaller altcoins have rallied. I think the meme coins are an example of a lot of money being thrown around. And so, we've already had a year of a bull run. How much longer can you expect the market to continue trading up for without a serious correction? I think we'll get more. I hope that we'll get more. But maybe it's just good to be aware, in the back of your head, you don't want to be holding that bag for another cycle. You want to sell that crypto at a profit. Make sure you don't wait too long. We are getting towards the end game, in my opinion. There's a lot of YouTube videos that say you're still early. I think if you bought now and you waited some 3 or 4 months, I think you'd make profit. But I think a lot of the serious gains have been made, in my opinion. Unless you want to go extremely risky and buy some meme coin that's got a $50,000 market cap. For the reliable altcoins, I think 4 or 5x is what you might hope for. That's not too unrealistic, in my opinion. And I think if you set those sell limits at those prices, I think a lot of them would be hit, depending on the altcoin. For Aave, I don't know. I do see $1,000 potentially this cycle. That's probably where I would set my limit. And that's just under a 3x at this point. Anyway, enough about the US dollar chart. Let's take a look at the Bitcoin pair. And again, this is where things get interesting. Now you'll notice that the US dollar chart and the Bitcoin chart look really similar in terms of the low that we got last cycle, the high. And in fact, some of these time frames are basically the same. Last cycle, it was 92 weeks from low to high on the US dollar pair. Here it was 93. It was about 40 weeks when we bottomed out. Let me just check quickly. It was 39 weeks before. Here it was 40 weeks. It was 15 weeks after the halving when we got this peak. It was 10 weeks after that when we got this trough, and then another 28 weeks when we got this high. Basically a carbon copy of the US dollar chart. The percentage moves up weren't the same, but that's to be expected because Bitcoin obviously rallied as well along with the crypto space during this time, but Aave outpaced it to a decent extent. Now, if you want to bring that data over here, it suddenly gets very messy. We can see that here, it's currently following with the red, blue, yellow, a similar enough pattern to what we saw last halving. 15 weeks after we put in the peak here. You could argue 15 weeks after here we put in the peak. 10 weeks after we put in the trough. But now we've broken above. So you could argue that we're now currently at this stage for Aave. And potentially we've put in this peak here, which is what this high is. I hope it's not, but that could potentially be the high for Aave on the Bitcoin chart. I personally don't believe this, but there is a way of looking at it that suggests this. So just be aware. We also have the similarity of the trough matching with a previous rejection. Here we have the trough matching with a previous rejection. But what throws the spanner in the works is the time frame. Here, last halving, you'll remember, US dollar and Bitcoin chart, it was 40 weeks before the halving that we bottomed out. If we take a look here, we bottomed out 2 weeks before the halving. So if you're thinking of having an extended bull run, like we did last cycle, where we basically went up for a year and 8 months, a year and 9 months, you're looking at basically 2026 January when we peak out. Now, this to me is very bullish. I think it's a very extreme case. And again, that's if you're mapping the total duration of the bull run from low to high. That's the time frame that you get. All these others that are based on the halving, after the halving, they suggest a much sooner peak. And again, like the US dollar chart, a lot of them point to Q2 of this year, Q2 of this year, matching the US dollar chart. We have one for April, this purple one here that measures all-time high or cycle high after the halving. We have this white one here as well that measures from the peak after the halving to the cycle high. That's 38 weeks. Again, that puts you in June. If you want to follow the colors with each move from peak to trough to all-time high mapped, that again puts you in June as well. And if we do take a look at the US dollar chart, we can see that basically previously Aave, when it comes to peaks, the Bitcoin Aave pair has peaked at more or less the same time as the Aave USD pair. You can see here back in 2021, it was end of February. If we go back here to 2021, we got that similar peak at the start of February, but the all-time high peak was mid-May for 2021. This peak, literally the same week on the US dollar chart. So something to look out for is, if Aave is very overheated, if altcoin season has taken place and we've seen strong rallies, look at the Aave Bitcoin chart and see if they peak at the same time. If they have similar peaks, maybe it's time to sell your Aave. In terms of where it could go, again, we're just going to measure from the trough. And I'm going to bring this over so you can see. And we're going to measure from the peak and compare them. The peak is obviously going to give us a much lower evaluation of where the high could be for Aave. The peak would put you at about 6,500, and from the trough, it would put you at about 14,500 sats. A big difference there. To be honest with you, I would lean towards more from the trough to the high, and that's simply because it would just be returning to its previous highs. And I think Aave can do that on its Bitcoin pair. I wouldn't expect it to go much higher. Again, if you think that we're getting a 700% move here, that means it has to outperform Bitcoin by 700% from this price. Bitcoin was just under $100,000 in November, I'm pretty sure. I think $90,000 was kind of the price. I think it wicked up to 100,000. We'll say it's 90,000 just to keep things easy. If Bitcoin's going to 2x from this point to the end of the cycle, they're looking at Aave doing roughly a 14x on its US dollar pair from November. If we go to the US dollar pair and look at November, we'll take it from the low on the same week, or somewhere around the same week. It was $160. A 10x alone is putting you at $1,600. And if you want to do the 14x, you're going to be at something around $2,100. I don't know if that's something you should aim for with Aave. I think that's very risky to wait for. It's done really well. I think it will at least return to its previous highs on the US dollar pair. But do you think it can really hit a 7x from the current price? That's up to you to decide. I don't know. I can't tell you. I can just tell you what I think. And I would be hesitant to sell my Aave then, just because I don't know if it would reach that point. And if it doesn't, I'm holding a bag for a very long time, potentially holding a bag that might not ever rally up to the highs again after this cycle. Who knows? Back to the Bitcoin pair anyway. For me, most of the indicators here point towards a Q2 peak on the Bitcoin pair. Previously, we've seen Aave peak on its US dollar chart at a very similar time to the Bitcoin chart. That doesn't mean it's going to continue to play out that way. It's just something useful to keep in mind. A lot of this data as well is based around one key point. If it doesn't want to follow that key point, a lot of this data is kind of invalid, because it's all based on this assumption that after the halving, XYZ will happen like it did in the previous cycle where XYZ happened. And we're saying XYZ will probably happen again because of the halving. That's very dubious. I think we'll see probably some kind of loose similarity. We might see peaks. Something I'll tell you for free, I will not be holding any altcoins by the end of this year. I will be sold out, and mainly in Bitcoin and USD. That's just me though. There's a saying in crypto that is sell in May and go away. And a lot of these price points would suggest that's a good idea for this year. We often see some kind of major peak happen around May. Remember, it's a couple of days away from February. We're about a week away from February. There's still quite a while, but also a few months in the crypto space go by like that, just gone. So just don't let it be September, October. Crypto's been trading down for 3 months and you're still holding a bag. Maybe that's when you should call it quits. But again, that's for you to decide. I just think these are interesting points that you should be aware of. I'm going to wrap up the video. If you found it useful, please leave a like, subscribe as well. Share it with your mates if you think they might be interested. Comment down below if you think I missed anything, or if you want me to cover a specific altcoin. Either way, thanks so much, guys. Take care and peace.